which is note number 7. So average price, it won't be usable or neither utilized where in our retained income. And then above average price, it is the price where or which using gonna be used where on our retained income. In other words, here we're gonna use our above average price. Remember, the word above means the lowest price. Because how do we get the above average price? We say actual price minus average price is equal to above average price. Meaning the actual price is the total price for both for both these shares, which is when we add average and above average, we get what? Our actual price. The actual price works where? Works on our cash what? On our cash flow statement under financing activities. Then average price works where? Ordinary share capital. Then above average price, it's where the one that we use it where? On our retained income. Then we have dividends. Dividends. Remember, it is the return that the company is giving. If ever you can check on our previous videos where we have explained the interpretation in terms of the dividends. It is the return that the company is giving to whom? To shareholders. Then the dividends are paid after 6 months and after 6 months or at the end of the financial year. So we have what? We have an interim dividends, then or interim or what? Or paid. And what? And final dividends. Or sometimes they will call what? Recommended or declared. So utilize or neither be familiar with these ways. So interim dividends are the ones that have been paid after 6 months or within 6 months or during the year. Meaning if ever you can just know that interim dividends are being paid during the year or after 6 months or before 6 months. And then final dividends are the one that's going to be paid when at the end of the year. So why we call it recommended or declared? It is because they have not been paid, but the directors have promised who showed us that they will pay these dividends. They are not yet being paid. That's why we say recommended or declared. Then we have what? Balance at end. Balance at end. So now remember here we add this. Our dividends gonna be brackets because we are paying, and then our buyback also gonna be brackets because we are indeed paying. Then how do we get our balance at the end? We're gonna say balance at the beginning plus net profit after tax minus buyback of shares or repurchase minus dividends paid. So dividends is equal to balance at the end. Thank you.